All right, back to work. Back to work. Hope you guys made some money today. J-Pow is behind us. And man, these charts look beautiful in front of us here tonight. We got some gorgeous ranges this afternoon with J-Pow speaking. You know me, I love me some range bond markets. And if we're lucky tomorrow, we're going to get one of those slingshot reversals. I see slingshot reversals setting up right now on the 60-minute time frame and the tick charts. We'll talk about slingshot reversals, why I love them so much, my entries, my exits for tomorrow. By the time we're done tonight, you'll have an easy roadmap to make some money tomorrow as well. Before we jump in, though, and talk my favorite trades for Thursday, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, hit that like button for me. Give me a shout out down in the comment section below. Thank you so much for tuning in, supporting the channel. Let's go find some more winning trades. Been a great week this week, and man, oh man, these charts look beautiful. What's happening for tomorrow? Well, Nasdaq triple Qs are all ready. I got the E-mini and the SPY is ready in front of me. I have three important clues tonight on the charts in front of us, telling us pretty much exactly where the best money making opportunities, the best entries and exits are going to be for tomorrow. I see one of those three important clues right here on the 60-minute time frame. We are bullish into a trading range here on the S&P and SPY, bullish into a trading range here on the Nasdaq. We know that ranges love to rotate back and forth, and right now the bears have tried once, they've tried twice to hold this sucker below that trading range, and we're looking for that slingshot reversal going back up into that trading range. The 60-minute time frame tells us the buyers are trying to rotate this price all the way back up into that range. I call these slingshots as we rotate and slingshot off of that low. But it might not be that easy, though, because on the tick charts tonight, there's a couple more important clues that the buyers may not have it as easy as we hope they will. We'll talk about that in a moment. Before we dive in, though, and talk about two more important clues and what I think might be the hardest part for tomorrow, let's make sure we check our schedule for tomorrow. Make sure we know what news we have on the schedule. We have no major news for tomorrow. Don't worry about trade and jobless claims at 8:30 Eastern Time. Nobody cares about that stuff. We saw that ISM services number miss expectation today. That means, of course, bad news is good news right now for rate cuts, and everybody shifts their focus now to the non-farm payroll number, the employment number coming out on Friday. So no major news for tomorrow. Everybody now is waiting for the non-farm payroll number tomorrow or on Friday morning at 8:30 Eastern Time, and we'll come back tomorrow night and we'll give you guys an easy roadmap to trade on non-farm Friday. But first, though, let's make some money on Thursday before non-farm Friday. Back to our charts. The money is made, of course, on the charts. Let's talk about my favorite trades here for tomorrow. We mentioned before the 60-minute time frame, it looks ripe right now, right? Bull move into a range, strong run down. The bears have tried once, they've tried twice. We talk about what's called the 2-try rule in our free video classes, right? 1 try, 2 try. Usually when this happens, we're running back up into that range, slingshotting back up into that range above. But it might not be that easy, though. Let's talk about this now. Let's go to tick charts here now. We don't trade off time charts in our trade room. We trade tick charts because tick charts make pattern recognition a whole lot easier. This is a 7,000 tick chart, upper left-hand corner. And if you're watching for the first time right now, that yellow line right there, that is the 21 EMA. It's pretty much the only indicator you need to find lots of winners with us every morning in our members trade room. There are two additional clues, I think even more important clues right now on the tick charts. One of them, look at how beautiful this chart is. It's a bull move up into a trading range. Are you seeing this too? They say the markets are fractal, right? The same patterns on the 60-minute. This is the same thing, right? It's a bull market up into a trading range, a strong shot down. Are you seeing this? Bears once, bears twice. So again, we're right in the same spot now. We're a nice slingshot reversal going higher. Now, I have three, maybe four different ways in which, different setups I'm tracking if we do slingshot higher. That's kind of the easy part for tomorrow, right? I've got four different setups I'm tracking if we go higher. But here's the bad part. Here's the bad news. The strong rundown, right? That is a very strong rundown. And as most of you guys who watch these videos regularly, anytime we see a strong move lower like that, we have to expect the bears right now are going to try to come back and retest that low. I have three different ways, different setups to track or buy right on that move back down, all right? Let's talk about that first. Let's talk about if we go lower, how to buy into that slingshot going higher. Later on in the video, we'll talk about that move going higher because that's kind of the easier one for tomorrow. Now, we know the market wants to go higher, but again, we know that move down, right, was to drag this thing down. So knowing the bears are going to try to retest that low, it's all about bear traps, right? Bear traps are where usually the money is made in these situations. Now, bear traps come in lots of shapes and sizes. For example, I can get a bear trap below that 61 3/4. That's a higher high in price, a move right below that low, strong green candle, closing firmly above the moving average. That would be a bear trap entry. Let's say we go a bit lower, right? Go a bit lower here. If we go lower, right? Trend line right there, prior swing right there. In this case, I'll look for what's called an inside bear trap. It's basically a bear trap inside of that swing. It's one try for the bears, two try for the bears. It's a higher high in price. It's a trap right below that low. And again, remember, the reason why I want a bear trap right here is because, again, I'm trying to get this slingshot reversal going higher, but I have to respect the momentum, right, of that strong move down. And I'm hoping if we get another shot going lower, I'm hoping some rookies will come in here, try once, try twice, and I can use that bear trap pattern to run their stops, right? If you're trapped short, you get stopped out, it squeezes those stops, and they get that run, right, that slingshot move going back up as we go higher. Now, one more thing. If we go back and retest that low, if the bears are successful to retest that low, now we flip this into what we call a double bottom reversal. What does that mean? If we run all the way back to that low now, that is what I call mission accomplished, right? The bears have completed their mission. They've retested that low. Now think about it. Anybody who sells short up here, where are they taking their profit? They're going to probably take their profit somewhere down around levels of support. So the sellers who get in, they become buyers at the low. If we're lucky tomorrow, we'll get a failure pattern, right? It's a little bit different. It's two tries. We don't need a bear trap. I wouldn't mind a bear trap, but all I need is that technical one try, two try failure pattern. We teach this, of course, in the free video classes. Run those stops. This would be, again, we call these two try failures. Bears once, bears twice. It could be a bear trap. We could get underneath that low, right? That would be a technical bear trap. Higher high in price, move below low, right? Technical bear trap. But all we really need, though, is a retest of that low, trap those rookies in, because once those bears get caught short down there, now we have all the bears who sold short up here. They're taking their profit down at that low. The sellers become buyers to buy their way out, and then we get the rookies trapped in. When the rookies get stopped out, they become buyers as well. Everybody is a buyer on these double bottom reversals. What I always do is we know that if we can squeeze those stops down there with a two-try failure pattern, what we'll do is as the market runs up, we know where it wants to go, right? It wants to go back up into that range and complete that pendulum swing going higher. What's the best way to add to your position or jump in again? It's going to be a bear trap. It will always be a bear trap on the way back up into that trading range. It's a higher high in price and a move right below, that low, right? Again, we call these double bottom reversals, right? It's a strong run down, a pop up, it retests the low. Remember, guys, I don't have a crystal ball. I don't know where that entry will be. It may be a bit lower, right? 1, 2, back up again, right? So don't be afraid to hit that if it goes a bit lower, right? Again, double bottom. Don't pick the bottom. Trap those bears in, squeeze those stops, grab that bear trap pattern on the way up. Profit off the high, leave that runner, right, for that pendulum swing, that slingshot reversal going higher. There's one more variation of this I want you to be aware of, and then we'll talk about the kind of the easier trade, I think, is going higher here. If we end up running back to that low, again, my favorite trade is to trap traders in, the sellers right there, trap the bears in, and squeeze their stops. Sometimes we don't get that, right? Sometimes we simply don't get that. Sometimes it comes off and it bounces so hard off that area, you can't get the entry, right? And a lot of times what happens is it becomes a V bottom reversal. If we V bottom off that low, it almost always will begin to grind going higher, okay? Now, if you're anything like I am, right when this thing starts grinding higher, you're going to get frustrated. That voice in your head will say, come on, man, get in, you're missing it. Do not chase these going higher, because what's happening is as it bounces off that low, these are bears getting squeezed out. Eventually, the buyers will want to come in and they're going to want to buy nice and low. So find a new channel off the high, mark off that low, look left, find some prior swings, and what you want is you want that first test off the low of that channel. Now, this could be any of the entry patterns you guys learn in the free video courses, right? It could be the bear traps. It could be a seller failure pattern. It could be a pullback combination, a strength trade, right? Going in, this all should make sense if you guys are going through the free video classes. But that is what we call a V bottom, right? It doesn't trap the bears here. It's simply boing right off that low and begins to grind going higher. So find that new channel. Don't chase after it. And whatever you do, don't miss the first test off that low as part of that slingshot reversal going higher. Man, oh man, excited for that setup tomorrow. Now, let's slow down for a second, right? Because I know everyone watching right now, I know most of you guys watching, you've learned these setups. You're making money with traps and failures, double bottom reversals. But if you're watching for the first time right now, this might be a brand new language for you. But don't you worry, I teach all of these entry patterns. I have hundreds of examples of all of these setups on real charts, real setups, all taught in more detail in my free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free trading course, because the strategy I teach in that video series will show you a simple trick we use in our members trade room to know where the best winning trades are going to be each day. Then I want to help you make money on your own out there. I'll teach you 4 my favorite entry patterns, help kickstart you making money on your own. Guys, if you're not making consistent money right now, if you're missing the best trades each day, taking too many losses, if you're still unable to qualify for a funded account at Apex or Top Step, hit the link up top there, take that free course. It'll give you a simple roadmap to follow every day. Perfect for someone to make the jump into full-time trading. Also, keep in mind, too, I'm going to put all the important links we talked about tonight on the description of the YouTube video. Put the free class links down there. Definitely start with the free classes first. I'll put my trade room membership links down there. We trade together every morning at 8 o'clock Eastern Time. And also, too, I'm on Twitter. I post a lot of updates on Twitter during the day. If you're on Twitter, give me a follow. All the details, description of the YouTube video. But that's where you can learn more and see a lot more examples, right? Really examples of these patterns I'm talking about in this video. So now you know, right? Now you know the ways in which we're looking to buy this thing, either bear traps, right? Or with those double bottom reversals running higher and some variations I'm tracking for tomorrow. Now let's talk about that slingshot going higher. I mentioned earlier, these are kind of the easy part, but I'll tell you right now, if you're not prepared mentally for this, it can be easy to lose money and make some poor decisions. Let's go to the Nasdaq now. The Nasdaq is very similar here as to the S&P. It's a little bit messier than the S&P. Over on the 60-minute time frame right now, bull market up into a trading range. We know that ranges are magnets, and we know ranges love to rotate back and forth. When they break below, they love to snap, right, and run higher. Again, I kind of call these slingshot reversals as we rotate or slingshot off of that low. And again, just like on that tick chart, strong move down, bears try once, bears try twice. Again, in a lot of situations like this, right, it will snap back up. But like I mentioned before on the tick charts here, that strong run down, those bears will try to run back down again. Let's talk about the tick charts here now. Go to those tick charts here. We trade tick charts, of course, every day in our trade room. A 4,000 tick chart on the Nasdaq. Nasdaq is lower volume than the S&P. Same basic idea, right? Here we have a bull market up into a trading range. There's your bears once, your bears twice. Amazing how the tick charts are so similar right now to these 60-minute time frames. Again, as I mentioned before, that slingshot running higher, the amount below the range, the amount above the range is we now target going higher. But again, the big elephant in the room right now, the big challenge right now for the buyers is that strong run going lower. We have to anticipate they're going to try to retest the low. Look for those bear traps I talked about a moment ago on the S&P 500. Now, as we go higher here, the most important thing as we go higher is to buy as low as we can, right? We don't want to get ahead of ourselves and assume this thing will keep on going higher without us. So if we do end up rotating higher here, I want to buy as low as I possibly can. And to do that, it's always going to be, you guessed it, a bear trap pattern. I talk a lot about bear traps and bull traps, right? Right now, these are bear traps in a bull market because they work so well, right? Once you find something that works well, once you find that cow, right? You just milk that cow every day, and bear traps in a bull market, they work very, very well. Remember, as we rotate higher, right? As we rotate higher, it's that higher high in price, a move below a prior swing, right? And that is going to be your bear trap pattern, right? You'll see these everywhere on charts. Now, most important thing is this will get us in to buy as low as we can as we get that rotation, as we try to make our rotation up to the high of the range, and most importantly, as we make that rotation right up into that pendulum swing up overhead. Now, two more variations of this. Oftentimes, and we saw a great example of this today in our trade room. Oftentimes what happens is we get that slingshot reversal, we run up, and now it's so strong going higher here, we don't want to buy high, right? We want to buy as low as we can. And to do that, we look left, we find what was resistance, and we look for now what's called a breakout pullback. All right. Now, breakout pullbacks are a pretty simple idea, right? We slingshot off the low, get a nice strong move higher. I don't want to buy high. I look left. I find the prior highs of that trading range, and I use that basically as an area of support. Now, we got to be careful on this, right? Because, it's been a wild market the last few weeks. This may end up rolling all the way back down to that range again, right? So I can't pick that bottom right there. I'm not blindly buying that bottom. What I'll do is try to get myself underneath the 21 EMA. Once we have a strong run up like this, we expect another leg in the same direction. Strong moves love to retest, right? They love to retest that extreme. So knowing that, but also knowing it may want to rotate back and forth like ranges do, what I'll do is bears once, right? Bears twice. Get those rookies trapped in and use basically a two-try failure into pullback combination, failure into bear trap combination. This again will make a lot more sense once you get through the free video classes, right? But that's the goal, right? The goal is, if we do get that nice strong run here tomorrow morning, we're not going to chase it as it goes higher. We'll take our profit off at the top of that pendulum swing and then wait for that pullback. Again, I have no crystal ball. I don't know. It may roll all the way back down again, and we'll talk about how to short that here in a second. Don't you worry. I'll get you covered on that. But again, I'm going to watch and see what happens at the top of that trading range, right? Like back here, right? Like back here. There's that trading range right there. Right up, we break out, we pull back, 1, 2, and back up. Too bad it happened right towards the end of the day here today. Same idea, right? Breakout pullbacks. Markets love to pop up, pull back, and again, trap those bears in with 2, use that 2-try failure, squeeze those stops going higher here. Now, at what point, how could I sell this thing back down again? How would you know? How would you know something has changed? Well, it's pretty simple. What will happen is it'll run up and it will usually V-top, right? It'll V-top, pop back down, and start grinding down like that, right? If it starts grinding down like that, we no longer think this thing is continuing to go higher. We'll look left, find that low, mark it up around that high, look left, find some prior swings, and as always, this is just like that V bottom scenario I mentioned earlier, right? I mentioned a V bottom on the S&P earlier. This is basically a V top, right? We go out, we take out our highs. Again, who knows, right? Who knows? Wild markets these days. Non-farm payrolls is 2 days away. Everyone's obsessed with non-farms on Friday. We make it that slingshot up. We make it that pendulum swing completed. We may not get that follow through for that breakout pullback. If we get whacked off this high and we start rolling back down into that trading range, watch out for that grinding motion going lower, and then find that first test off the high of that channel, and you know where the market wants to go, right? It wants to rotate back and forth, right? Back and forth. So short that sucker off the high, Then all the way back down here, what do? What do? You trap those bears in, that double bottom reversal, squeeze those stops right back up, keep buying low, selling high, trading that rotation. A lot of examples of setups like this in the free video class. If you guys have done so already, grab the link I post up top there in the upper right-hand corner or in the description of the video. Now, one more variation of this, one more important variation is that sometimes when the market rotates off that low, it doesn't just squeeze and rip, right? If it squeezes and rips, it becomes a breakout pullback, right? If it squeezes and rips, it becomes a breakout pullback, right? So that's very common. Sometimes, though, it'll pop up and begin to grind. That grinder is a huge giveaway. Again, anytime we see markets grind like that, all we do is draw a trend line off those highs. We pin it down right around that low. And in this scenario, with this example, what I'll do is I'll start looking left and finding these prior highs over here, that high right there, that high right there, that high right there, and try to get the entry around the low of that channel, lining up the high of that range. Right? It's just basically a variation. It's a variation of a breakout pullback. I just want you to be aware, though, that if it grinds up like that, that's the technique I like to use to find that breakout pullback area. Right? And again, I'm not going to blindly buy the bottom. Right? We don't do that. Right? We get around the area we want to be getting in. We get below that 21 EMA. Getting below the 21 EMA is where failure patterns live. Right? So bears get trapped below 21 EMA, that gives a failure. Squeeze those stops, right? Use those stops. Use the bears who get short right there, right? Use their stops to fuel your profit targets. And again, failure into pullback, right? As we go higher. Now, one really cool thing about pop and grinds like this is the size of that pop leg. Is the measuring leg. I can take that pop leg, project that off that low, and that becomes the target, right? So again, if we pop up and we start grinding, going higher, easy to find our channel off the highs, right, off that low. Pretty easy out there to look and see, okay, there is our prior highs up there. We know we want to get in long now. We get that pullback, maybe below a prior swing for a bear trap, almost always below that 21 EMA for that failure pattern, that failure into pullback combo. Again, this will make a lot more sense in the video course. And then again, the size of that pop leg, right? That's your measuring leg. Remember, trends love threes, right? One leg, two leg, three leg. The first leg and the third leg are almost always symmetrical, right? If you've studied Elliott wave before, right? It's 5-wave sequence, right? Wave one, wave five is almost always symmetrical. Not always, right? But usually, right? So we got the first leg up right there, pop leg up, pin that right to that low, and then that will give you now, right, that target going higher. One thing we always talk about in our trade room is if you want to make more money, don't trade more often, right? Don't trade more setups. Don't dilute yourself. Trade more markets. Just get better at holding on to your trades all the way to their intended target. Squeeze every drop of profit out of that trade, and by knowing how to measure these kind of symmetry moves, that will make it easier for you to hold on and let trade run. And obviously, doing it with me every day, I'll make sure I hold you accountable every morning in the trade room so you're not cutting those winners too early. All right, guys? So that's the game plan. That's the game plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come out and trade it with us. The easiest way to start making consistent money in any market you want to trade is come out and learn with me, trade with us every morning in our trade room, 8 o'clock Eastern time, every morning at the opening bell. I'll put all the important links tonight in the description of the YouTube video. Any questions, any concerns, any trouble getting started, don't be afraid to call the office, send us an email, use live chat. We're always here to help out the questions along the way. So don't be a stranger. I'm always here answering calls, answering questions. If you need help, definitely reach out and get help from us here on the website. All right, guys, hope you learned a bunch here tonight. Exciting session coming tomorrow and more good stuff coming tomorrow night as we prep for Non-Farm Friday. Hope you learned a bunch tonight. Hope you use this knowledge to make a killing tomorrow morning, and hopefully I'll see you trading with us sometime soon, 8 o'clock in the morning trade room with all the members here at SOT. In the meantime, be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye for now.